As of 12:01 a.m. on February 1st, 2026, the United States federal government is officially in a state of partial shutdown. This funding lapse, the second of the administration's second term, was triggered after a midnight deadline passed without a House vote on a Senate-brokered compromise. While the Senate passed a deal late Friday with a 71-29 vote to fund 5 major agencies through September and provide a 2-week bridge for the Department of Homeland Security, DHS. The House of Representatives adjourned for the weekend and is not scheduled to return until Monday. The impasse is fundamentally rooted in the Minneapolis incident, where federal immigration agents fatally shot 2 U.S. citizens, Alex Preddy and Renee Good, during a crackdown on protesters. This has led to a red line from congressional Democrats, who are demanding an immediate end to what Minneapolis Mayor Jacob Frey has termed the ICE siege. The specific demands from the Senate include a mandatory code of conduct for ICE, a ban on agents wearing masks, and the requirement of body cameras, provisions that Republican leaders like Senator Ron Johnson have labeled a complete non-starter. While the economic sting of this shutdown is predicted to be less severe than the 43-day stoppage in late 2025, the timing, hitting exactly at the start of tax season and amidst high civil unrest, creates a volatile domestic theater. Trump has expressed support for the Senate deal on Truth Social, signaling that the shutdown may be short-lived if the House acts swiftly on Monday. Today, February 1st, 2026, marks the activation of a 10% tariff on all goods from a coalition of 8 European nations: Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland. This Greenland ultimatum is a direct response to Denmark's refusal to negotiate the sale of the autonomous territory to the United States. The president has stated that these levies will remain due and payable until a deal is reached, with a scheduled increase to 25% on June 1st. The geopolitical tension escalated significantly after NATO allies deployed troops to Greenland last Thursday in response to U.S. national security claims over the Arctic territory. While the U.S. claims to have secured a framework deal involving the Golden Dome defense system and mineral rights during the Davos summit, European heads of state have responded with unprecedented solidarity, even suggesting a potential boycott of the World Cup in protest. Geopolitical angle: this move signifies the peak of transactional federalism on a global scale. The U.S. is leveraging its massive consumer market to force a territorial realignment in the high north, prioritizing the Polar Silk Road and critical mineral rights over traditional NATO cohesion. The financial markets spent the weekend digesting the Friday nomination of Kevin Warsh to replace Jerome Powell as chairman of the Federal Reserve. Warsh, a 55-year-old former Fed governor and Morgan Stanley executive, is seen as the central casting choice, an establishment credible figure who has nonetheless called for regime change and lower interest rates. The nomination triggered a historic break in gold fever, as investors priced in a more predictable dollar-supportive monetary policy. The massive safe haven trade that had pushed gold and silver to parabolic highs collapsed. Despite the market relief, Warsh faces a challenging Senate confirmation. Senator Thom Tillis has vowed to block any Fed nominee until a DOJ investigation into the central bank's building renovations is resolved. If the confirmation process stalls, the Warsh rally in the dollar could quickly reverse, reigniting the precious metals surge. On January 15th, the White House unveiled the Great Healthcare Plan, a radical policy shift that aims to bypass insurance companies and PBMs, pharmacy benefit managers, to deliver savings directly to Americans. The plan centers on most favored nation (MFN) drug pricing, which would benchmark U.S. prices to the lowest in the G7, effectively promising to slash prescription drug costs by 80% to 90%. Sector impacts: the losers. Traditional managed care stocks like United Health Group, UNH, and Humana, HUM, have already seen significant declines, dropping 20.7% and 22% respectively, following the administration's proposal to keep Medicare Advantage rates nearly flat in 2027. The winners, retail giants with pharmacy clinics like Walmart, WMT, are positioned to benefit as more verified medications are moved over the counter, OTC, to reduce doctor visit dependency. The platform, the launch of TrumpRx.gov, represents a direct-to-consumer model for drug delivery at cost, a move that the president claims will end the profiteering of corporate middlemen. Operation Absolute Resolve continues to reshape the Western Hemisphere. Following the January 3rd capture of Nicolas Maduro, the U.S. has maintained a naval blockade of Venezuela to ensure U.S. companies run the country and stabilize oil infrastructure. The first U.S.-managed sale of Venezuelan oil, $500 million, was deposited into a Qatari commercial bank last month, sparking legal criticism from Senator Elizabeth Warren. Simultaneously, the U.S. is expanding this blockade strategy to the shadow fleet, the opaque network of aging tankers used by Russia and Iran to bypass sanctions. By broadly interpreting the law of the sea, UNCLOS, to seize vessels for flag hopping and lack of insurance, the U.S. is driving the value of Russian crude shipments toward the point of unprofitability.